Welcome, dear traders. Asian stock markets have moved from a growth to consolidation today. A plethora of economic data from the United States and Asian countries makes investors remain cautious as they need time to assess the fresh data. As a result, US stock futures opened lower on Thursday, and stock indexes in Japan and the antipodium countries traded in the bearish zone. Yesterday, Joe Biden and Xi Jinping met in the United States. This is the first meeting of the leaders of the two superpowers in a year and Xi's first visit to the US in 6 years. The meeting took place on the sidelines of the Asia-Pacific Economic Cooperation Summit and lasted several hours. The head of the White House described the talks as very constructive and productive. However, the negotiations did not result in a joint declaration of a cooperation or a joint statement. Nevertheless, the meeting between the two largest economies touches on all the major global issues. Therefore, the very fact of such a meeting is a positive, especially for the Asia-Pacific region. Meanwhile, the Chinese real estate sector remains a major headache for the economy, although October data released this week showed some recovery in industrial and retail sales. Hopes for a sustained recovery were dampened by negative data on exports and inflation. In addition, China has seen a sharp drop in real estate investment. The country's currency, after hitting a 3-month high, has started to slide again, despite the depreciation of the US dollar in recent days. The US currency failed to recover from Tuesday's steep drop. Fresh reports on the US released this week showed a decline in inflation against the backdrop of economic stability. In other words, signs of a so-called soft landing. Therefore, the Fed is unlikely to make a rate hike in December. The chances of a rate cut in the middle of the next year are also increasing. Therefore, the US dollar index is showing a bearish momentum today, even though the greenback is trading in the 104.30 and 104.50 range. Today, the greenback is waiting for today's US employment data or the US industrial production report. Anyway, the greenback's exchange rate against its G6 basket counterparts consolidated near 104.40 in Asian trading, strengthening across the board. US dollar bulls are hoping that the recovery will continue and its price will rise to the technical resistance level of 105.9. The next support level is at 103.56. The mixed fundamental data affecting today's trading in the Asia-Pacific region is not risk-averse and supports a weak yen. However, against the backdrop of a possible contraction in Japan's GDP and persistent deflation, the yen is looking less and less like a safe haven asset. The Japanese currency is being kept afloat by fears of a possible forex intervention by the country's authorities. Nevertheless, the yen managed to strengthen a bit early Thursday within the daily range of 151.10 and 151.50. During the Asian trading session, the Japanese yen was held on the downside against the US dollar near 151.30. At the same time, a significant strengthening of the Japanese currency seems unlikely. Technical support levels at 150.20 and 149.20 are well below on the chart. It seems that the pair may rise towards the resistance level of 151.70. On the other hand, there may be selling interest at this level. In other words, the situation could potentially create a barrier to further upward movement for the pair. The psychological level of 0.65 is the next resistance for the Australian dollar. On Thursday, the Aussie closed the Asian session below this level in the area of 0.6480. The main reason for the Aussie's bearish move was today's domestic inflation and the labor market data. Both the wage index and the number of jobs increased more than expected. However, Australian consumer confidence fell and most new jobs were part-time. This fact offset the positive impact of the report, and the Australian dollar's winning streak against the greenback came to an end. As a result, the AUD dollar pair went into a consolidation within the daily range of 0.6461 and 0.6522, maintaining a bearish trend. The New Zealand dollar also interrupted its upward momentum today. In early Thursday trading, the Kiwi declined from a multi-week highs and broke through the critical support level of 0.60. As a result, the New Zealand dollar intraday trading range has shifted down to 0.5971 and 0.6031. Moreover, a significant rise of the Kiwi to 0.63, as it happened in July, is unlikely to happen again in the near future. In fact, food inflation in New Zealand reached its lowest level in almost 2 years in October. Against this backdrop, New Zealand's financial regulator may keep its monetary policy at the previous level of 5.5%. In particular, the meeting of the Reserve Bank of New Zealand is scheduled for November 29. The regulator has kept its interest rate unchanged 3 times in a row in June, August and October. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your comments and questions below, and see you online soon.